All right, the next panel is Humanizing Venture Capital. Investors Spill the Tea. And we're going to welcome Michael, Payton, and Justina. And for the moderator is Madeline. Welcome on stage.
All right, is this mic working? Can everybody hear me? Everybody good? Nice. We're going to try to have a really natural conversation in the world's most unnatural allocation of chairs. But hi, nice to meet you guys. I'm Madeline. Hope you've all had some food, maybe had your first beer. When TechBBQ called me up with the idea for this panel, I had two questions. The first was there going to be an actual barbecue? And the second was, are we going to get those really sexy Britney Spears microphones? And we have the answer to at least one of those questions. But now what we're doing, and where the panel came from that origin, is the topic of humanizing venture capital, which is a topic that we actually just discussed. What the hell does that even mean? But the whole purpose is we have the talks about how to fundraise in a downfall. We have the talks about playbooks and tips and tricks. But what if we approach a topic that's not all about insights per second, and we approach something that's a bit more open-ended, a bit more personal, and we really speak about an industry that can be very opaque, very much like an ivory tower, which is a term Payton used and I really loved. An industry that can be very intransparent. And let's discuss venture, let's discuss the investor-founder relationships, and let's discuss it all from a personal perspective and very anecdotally. So I will now introduce the amazing panel I have here. We've got Justina. She's a VP at Bessemer, which is a fund I had to look up how to spell because I misspelled it 3 ways in 3 different ways. And maybe you could say a little bit about yourself, a little bit about your investments before we pop onto the others.
Yeah, sure. Thank you. So it's great to be here. And part of Bessemer Venture Partners. We're a multi-stage global fund doing anything from first check to pre-IPO. We've been investing in Europe since 2004. But mostly with partners sitting out of the US. And when we got to around 50 portfolio companies, we thought, well, we need people on the ground in Europe. There's clearly a lot happening here. So 2 years ago, we set up the office on the ground, based in London, and really looking forward to meeting more founders here.
Okay, and then next we've got Michael Jackson, and I will spare you from, I'm sure, a life lived with all of the pop star idol Michael Jackson jokes.
It's an easy name to remember, and
it is.
But if you ever have a daughter, name her Beyonce.
Yeah.
Make sure it sticks there. It's always an icebreaker.
I would love to introduce you actually to the crowd. If you own a computer and you work in tech in Europe, you've seen his name on LinkedIn. He is the LinkedIn Person of the Year and has a CV longer than what I can feasibly remember. So please let us know, Michael Jackson. What are you up to?
So I do lots of stuff. So I'm deep tech entrepreneur turned investor. So I do direct investments, early stage, late stage, secondaries, fund investments. So hundreds of personal direct investments, indirect investments, over 1,000. I've also invested in more than 40 funds. On the advisory boards to banks, schools, governments, University of Oxford's Deep Tech Advisory Council, the Dutch government's Quantum Fund, the list goes on.
This is literally endless. So. And maybe last but very much not least, we've got Payton, who is new both on this side of the pond and to venture, and potentially the nicest person I've ever met in my life. So welcome.
It can always change.
Yeah, it seems like a nice guy. But at the end of this, we'll really figure out who's human and who's not. But welcome to venture, and maybe tell us a little bit about your background, about your many years as an operator at Google and whatnot.
Yeah, absolutely. And I'd say, hey, you have Michael on one end of the spectrum in venture, and me at the other, being relatively new. My background is on the operating side. Was very early at Google, helped build some of our ads products, helped scale our ads business. Joined Nest as they were acquired by Google, helped them scale globally, ran our global sales operations, and then have been running Nest Europe, moved over in 2017 to take that over. I've been working as an advisor to Hoxton Ventures, which is where I joined recently. We are pre-seed, seed fund, about 10 years old. Invest non-thematic, sector agnostic across Europe. Part of our model is to incubate in Europe and kind of export to the addressable market of the US. that's what we're about, and very pleased, very happy to be here.
Okay. So without further ado, we're getting personal. We're getting into venture. What was your biggest fuck up? Justina, I feel like you want to answer this one.
I mean, yeah, it's a big question. So I feel like when you're in the business of predicting the future, there's a lot of ways you can screw up. And Bessemer has been around for 100 years. We were founded in 1910, and that's given us a lot of time to make a lot of mistakes. And one of my favorite pieces of content, and this is public, it's on our website, we have this thing we do called the anti-portfolio. Yeah. And what the anti-portfolio is a hall of fame for companies that are amazing that we did not invest in. And so here's an example. So this is 2011, and one of our partners in the US, he's maybe the most brilliant person I've ever met, called Jeremy Levine. He is 3 hours late on his plane. He lands in LAX, and he has 2 meetings on his calendar, only the time for one. So Jeremy takes out a coin, he flips it, takes a meeting, and that is the story of how we did not invest in Snapchat. So that's sad to say, but I think don't feel too bad for him. He's done fairly well. He invested in LinkedIn and Pinterest, and is doing pretty well himself.
LinkedIn and Pinterest. I'm gonna cry myself to sleep at night. Maybe Michael, Payton, biggest when you went really, really, really wrong.
I never fuck up. No, yeah, it's true VC.
I'm gonna quote you on that one.
No, I fuck up all the time. If we're talking about VC stuff, I mean, there's always been investments should have done but didn't do. Letting sort of personal judgment cloud a decision-making process in the deal. I think if you start to get in, I think actually the biggest kind of fuck up I made on an investment was I invested in a friend's company and I shouldn't have.
No.
And I think that was a hard learning mistake. It was well over a decade ago. But never invest in.
And what about sort of within the scope of your many, many roles in venture, not necessarily investment related, where you felt, okay, I made the really wrong decision here?
Yeah, there's been some things I've said no to over the years, like some venture positions and some board positions where it's now like multi-billion-dollar company I said no to. Yeah. And I was just like, wow, that was just... But the thing is, if you're in any business long enough, you're going to fuck up. And I think the key is just, you got to let it roll off your back. If you're in venture and you're not fucking up, you're doing venture wrong. Because it's a high-risk, high-reward business, so you've got to fuck up. If you're not fucking up, like in terms of your investment decisions, and it's just something you got to learn from, you got to refine, you got to keep going back to. But if you got the guys who are just like, oh yeah, I make money on every one of my investments, it means they're not taking enough risk.
I don't know, I feel like the moral of your story of fucking up by investing in a friend's company is really just don't have friends.
No, yeah, friends are overrated. You never want friends. Friends just get in the way of business.
No.
You can't take business personally. You just got to scrap your friends.
And Payton, I know you're new to venture, but you got many years on the other side.
Yeah, hey, and definitely I would look at somewhat similar from a career perspective. I've certainly had plenty of misses and had opportunities to go early to Facebook and Pinterest and Stripe and Lyft and all places that I said, oh no, I'm going to wait this out, right? So I think part of it is being able to spot those trends and go a little bit deeper than just kind of surface level and really understand the fundamentals. And then secondly, as an operator, one of the misses that I think we had early on at Nest was we went out with a global expansion strategy that was just planting flags. And we had a very distinctive difference in the results of those markets that we went to and invested in and went all in versus this kind of lightweight approach that was just a little bit more of peanut butter and a little bit just planting a flag and assuming that the awareness that we had in the US would just translate, right? So I think there's a lot of lessons learned just through a career that you can apply in a lot of different factors and facets to then, take note. And once you've seen it in the past, then hopefully help prevent that in the future.
I didn't expect when I asked what's your biggest fuck up that you would be mentioning peanut butter. What didn't really
never too late.
Me. And so now coming from like a very long career on the operator side, coming into venture, we spoke a little bit about this before as well. This kind of idea of a little bit of imposter syndrome a little bit of, what am I doing? As you mentioned, the whole job is like predicting the future. We can't always feel confident in that. Like, do you have imposter syndrome? What is your relationship to that? What kind of keeps you up at night?
Yeah, I mean, I would say, hey, for me, just coming into the space, it's certainly new. And having been in the Valley a long time, Sand Hill Road had this mystique that you weren't quite sure what it was all about, right? Like, are you going to drive down Sand Hill Road and the venture capitalists are going to pop out of the buildings and attack you? Or is there just money flowing out of them? Like, what is this like? And it's not until you actually go there, talk to people, or here in Europe, talk to VCs, and yeah, hey, they have feelings, emotions, they sit at desks with tables and chairs.
No, not the desk. That's taking it too far.
And part of it's just matchmaking, right? And that's a very inefficient market. And it takes a lot of blood, sweat, and tears on both sides to find that right connection. And I think whether moving into venture or looking to secure venture investment, it's something that, yeah, you have to work through and be comfortable taking no for an answer and moving on and learning from and continuing to evolve and iterate as you go along.
And Justina, Michael, is that something that resonates with you? Do you feel at all that you have sort of imposter syndrome, or perhaps less of a buzzword? Like, where do you feel still very insecure in the work that you do?
So I invest in deep tech. So taking examples, I'm on the boards and investment committees of 2 quantum-focused funds in Europe. I think it's very easy to have imposters. Like, if you're dealing with all these PhDs in the quantum space, I don't know what the fuck they're talking about half the time. I think
I can't even spell quantum.
There's other PhDs within the quantum space who don't know what they're talking about either. But you have to understand is that you also have strengths as an investor that they don't have. I've been an entrepreneur, I've sold companies, they haven't done that. So there's also just value added. So you have to understand it's a give and take, right? Like, no, I do not have a PhD in a very specific scientific field, but at the end of the day, I've also built companies and they haven't. So you have to just understand that you have to be complementary to the entrepreneur skills. And I think if you do that, at the end of the day, you'll be okay.
Yeah, I think that's very true. I think, when I joined venture, and I joined it from banking, I was at Goldman for a number of years, there was this expectation that, you should know everything immediately. And it could be that, every domain has such depth. FinTech, it's a whole iceberg. Even people operating on one side don't really know the intricacies of the other side. And deep tech, as you mentioned, data infrastructure, there's so much there that on day one, you just can't expect yourself to know everything. And over time, after iterating, talking to people in the space and respecting, where the entrepreneur is coming from and knowing that they will, for the most part, until you have enough repetitions in that industry, be the domain expert there, and just knowing that and recognizing that and giving time for yourself.
And maybe like switching gears a little bit from those feelings of insecurity or feelings of like how to be comfortable with the unknown. What do you really roll your eyes at on a day-to-day?
I'm not sure this is an eye-rolling moment. It's more what I thought venture was, and then when I joined, what I realized is very different. So I think from the outside, there's so much media about the size of raises, who people have raised from, and so much buzz and profiles and Forbes and Fortune magazine about this meteoric ascend of the founder. And it's almost kind of like the Marvel, comic of our times, the superhero idea. And so, I thought, it was very glamorous, very fast-moving. And after I joined, I, over time, developed this appreciation that it's everyday incremental adding to the business, almost compounds over time. It's, talking to customers, it's making the right hires. It's a lot of these smaller things that are not very sexy and don't make the front covers of the magazines. And oftentimes what you see is actually the founders who do the most out of what they've been given are the ones that impress me the most. So they may not have raised a lot of capital. They may have raised it but not spent it. But that efficiency, finding a way to go to market, establish customer love, and doing it with not a lot is actually what, these days, and, I think at the end of the day, something that's very impressive. And they may not get the headlines, they may have raised 15 million their whole life and is now IPOing. Yeah, but these ones are the ones that I think about a lot.
Yeah, I mean, I'd say things I roll my eyes at. I mean, there's a lot. in the venture startup world to roll your eyes at. I think if you take it too seriously, I think you're going to get kind of lost in losing the forest for the trees, right? Like, case I just had an entrepreneur was talking to me about a VC that he follows on social media, and he's like, oh my God, this guy, I really want this guy to back me. He's so founder friendly. And I've done 2 investments with this VC, and I just started laughing. I was like, look, his ghostwriter might be founder friendly, but just because he's posting that on social media does not mean that he is actually founder friendly. You're going to have to kind of see past a lot of bullshit on both sides of the table. Sometimes you have to see past that as an entrepreneur, and you have to see past that as a VC as well, because you do get caught up in certain things where you might meet a founder with a lot of hype around them, they've raised a lot of money, but it's just because they know how to play the game and they're really chummy with some of the VCs, and it doesn't necessarily mean anything. You have to kind of discern, kind of weed out the white noise and just kind of distill that and figure out what's the actual truth in the situation. But it's an industry full of a lot of BS. Like, you've got entrepreneurs who are faking it until they make it. You've got VCs who want you to think that every company they invest in is a 10x plus, when in reality their fund is lucky to make 1.5x, right? Like, it's a lot of marketing and gimmicks and stuff like that, and you just have to talk to the right people and find some people you can trust to get the correct information.
I mean, I honestly, when they said Michael Jackson's on the panel, on the topic of like, how do you really see through marketing or brand, and what is really underneath that? How do you really get to the gut of a human? Woo, that's not quite the word. How do you really get to the real center of someone? Get to really know them. When they were like, Michael Jackson's on the panel, I was like, I've seen your name every day since I worked in I've seen your name every day for 5 years. I think about you more than I speak to my mother, you know what I mean, on LinkedIn. For those of you who don't quite get that, he's a very prolific and I would say consistent poster, mostly of jokes. I
don't really give it much thought, but yeah.
No, but that's what sort of like my experience there, when you're like, you really have to, like, there's a certain perspective that you have on people, and be that a certain perspective that founders have on investors versus
I think
meeting with them?
You also have to take into consideration that the majority of VCs in Europe have been doing this less than 5 years. So the people, like, I had somebody the other day who was just like, oh my God, I'm a VC veteran, and he's been in it like 4 years. I was like, dude, you haven't seen shit, right? You haven't seen cycles, you haven't gone up and down, you're no exits in your portfolio. Like you just have to kind of understand, if you're one of the people lucky enough to have been around this industry long enough, and I'm going on 20 years, like, you just kind of understand you can't get caught up in the hype and all the buzz. Like, I remember being on a panel at another conference, this was like late 2021, and there was one of the panelists was just like, oh, I'm raising a new fund, and the new fund is focused on, we're not going to negotiate terms, we're not taking board seats, the whole list of just all the cliche shit that you want to be as like a founder-friendly VC. But that's just top of the market, right? That's when I knew that the market was at the top. Because there's just, at some point in time, you are a VC, you have to do a job. And that's part of your job, is to bring back money to your LPs, and as a VC, you have to remember that at the end of the day.
It's on that cultural aspect, in terms of like, I think everybody here is not from Europe.
Yeah.
Right? So you're both from the US, yourself having been from Hong Kong to Chicago, now based in London. On the topic of, and we're all working in European venture, right? Where do we feel that there's sort of a cultural element? Or has there ever been a moment where you're like, whoa, like, I am not in Kansas anymore? Maybe Payton, I mean, considering you're new.
Yeah, and hey, the one thing that I love seeing, and I think one of your strengths, is there's a lot of academic and research-based talent. I keep saying this and seeing it, there's so much talent and expertise here. I feel like the place where there's an opportunity is the commercialization and monetization, right? The go-to-market. And that's a place where, certainly in the US, people will sell ice to an Eskimo, right? And that's more natural versus the academic expertise sometimes, right? Hence, you have to filter out the BS, right, that Michael talked about. So that is something we're trying to help with, that, and in my role in particular, trying to help with that commercialization, go-to-market, and monetize a lot of the great talent and great expertise that exists here.
Justina, is that something that you've ever observed in your many places?
So I mean, I grew up in Hong Kong, spent a number of years in the States, and now work and live in London, investing in European founders. And I have to say, as an immigrant being in Europe, I feel like It's very welcoming, even across countries. There's so much going on. And earlier this year, we put out the Cloud 100, which is a list of 100 private cloud companies across the world. As a team, we sat down and we went through the list. And it was surprising to us that actually 20 out of the top 100 were Europe-based. And now this is a mixture of companies. Some of them are still headquartered here and are growing here. Others of them have moved to the US, but keeping headquarters here. And others are coming from the educational institutions and universities and then moved into accelerators. So I feel like the talent is, very much here. The ingredients that, I think maybe 10, 15 years ago were, a little bit less, especially on the growth side, is here today. And so that's partially why we've moved into the continent physically as well.
Maybe taking a step back, or maybe shifting topics. We all have angel invested, right? We all have, okay. I would love to actually talk a little bit about that and a little bit about your relationship, again, on that topic of sort of humanizing venture, humanizing investing. What changes in the investment process at maybe the interpersonal element as yourself as a VC, be it at Bessemer, be it at Hoxton, and yourself as an angel?
I'm happy to field. I brought a deal to our team that was a close friend, an early Google friend who started a company that I certainly see a lot of opportunity around. It is helping SMBs move and transition to employee ownership. There's a big cohort of the population in the US and in Europe that will be exiting companies over time. There's a human aspect of this, of helpfulness and helping people, and it was something that I see a lot of opportunity around. For us as an investor, it didn't meet some of the bar that is needed to deliver the returns that we would expect for our LPs, our investors. Everyone at the table agreed, hey, this is a great company, this is a strong founding team, there's something to this, but it's not quite where we see a, let's say, like multi-billion-dollar opportunity. In that case, it was a very clear opportunity for me of, hey, I believe in you, I want to support you, I'm going to write an angel check. It doesn't fit the construct of the firm, but for me personally, I believe in you and believe that there's something to this.
I think it's one of those points where I think how you invest as an angel is not necessarily the same mandate you'll have within a fund structure, particularly if you're in a thematic-focused fund. You can kind of go outside your comfort zone. You can also maybe as an angel investor, take bets on companies that might not be the outliers, right? Like we were having a conversation earlier, I backed a company that as an angel investor was comfortable backing, but as a VC probably wouldn't be comfortable backing because it's not going to be, there wasn't that potential for it to be $1 billion plus company. But as an angel investor, I didn't need that because I'm getting in first stage, and there's also opportunities to exit at Series B, Series C, et cetera. So it changes that sort of fund dynamics. At the same point in time, as a VC also, you have fiduciary responsibilities to your LPs that you don't necessarily... Big word, I know.
Gotta write that down.
Just been Scrabble. Yeah, you have certain responsibilities you have to your LPs that as an individual you don't have those same responsibilities.
And bringing it down, absolutely. So understanding that you can sort of invest in different scopes, different dynamics, be it fitting the fund or not, we need a certain return profile, blah, blah, blah. But if you think about, and maybe I'm asking a question where I'm assuming something that doesn't exist, but do you have, for example, a different tone of voice? Do you look for different qualities? Do you feel as though you give advice differently as Payton the angel, for example, as Justina the angel, than as Justina from Bessemer? Really thinking about how you operate and that relationship at the angel level versus at the professional venture investor level. Is there a difference?
I feel like the questions I get from the founders of my angel investments are more intimate in a sense. So the bar is not, I'm talking to my lead investors in my Series A or Series B. Sometimes they're very casual. It can be things like, I'm sending out my monthly update. Should I add an ask at the bottom, and what should I say? What's the tone of voice I should use? So I find that, sometimes it's a lot more informal, a lot more unstructured. And I'm curious to see if it's something you both have experienced as well.
I don't. I don't know. Maybe it's just I'm trying to be as honest as possible, or maybe to a fault with them. I think it's with whether it's my VC investments or angel investments. Everybody's just always asking me. Maybe even on a board level, they might think of me as being a bit more straightforward and honest as some of the other ones. So, and I get asked to be on boards because I give an honest opinion, and sometimes at the board level, that's not necessarily always happening. But it can also just be personality, right? Like my personality is just, yeah, if it's bullshit and I think it's bullshit, I'm going to tell you it's bullshit.
I would have you on my board just to help me spell fiduciary. Genuinely.
I would.
Got to ring you up for that. And Payton, do you have
Yeah, and then I would say similarly, there's certainly honesty and truthfulness that comes through regardless. The biggest difference for me, at least, is on the angel side, I'm probably a little more passive than on the institutional side, a little more active. I almost feel more of a responsibility and a remit because there's so much on the line of not just my money, but other people's money that we are responsible for, and therefore, and oftentimes more significant. And yeah, hey, that's a much more active role versus a lot of the angel stuff is a little more passive, if that makes sense.
And we are also very much in the role in the industry of giving advice and receiving advice, but often giving it, be it solicited or not. Thinking about all the maybe tidbits and advice you've given, what do you think was the worst advice you've ever departed? Onto a founder, let's say. Deafening silence. This was not part of the brief.
Worst advice we've ever given?
Yes.
Oh.
Own up.
Yeah, probably loads. I mean, yeah, I remember talking about a friend of mine who was in the Boston area at the time was, moved to San Francisco and had an offer from Facebook, and at the time it was still very early, and I was just like,
Facebook isn't going anywhere.
Really? It's not going to go anywhere.
MySpace is excellent.
Love Facebook. What the hell's that? No, there's also, I don't know, again, like you just give sometimes bad advice, good advice. Hopefully the good advice outweighs and numerically kind of outvalues the bad advice, but
yeah, it's hard. I think for me, I used to work at a growth fund, and there is a remit that we would have to do. So it would be tickets of 50 million plus, and sometimes we would meet incredible companies that were maybe one stage too early for us, and so the conversation might become, okay, you're raising this much, how much do you think you could do with more? And maybe we structure it in a different way. Maybe, then if you raise from us, you wouldn't have to raise for the next 3 years or the next 4 years. And, looking back, I think about it, I was like, I don't know, maybe that's a learning, it's hard to tell because, there's no parallel universes and you can't really say what would have happened otherwise. But I worry that, we may have ended up overfunding these companies, and it's really hard to sit on capital and not deploy it when your employees are coming to you and saying, oh, we should expand in this country, or I've got this great idea, let's try it out. We're not capital constrained. And it's really hard for a founder to sit there and say, no, we have to be focused. And sometimes there's that focus that comes with limits to your capital.
Yeah. If anybody has some last bad advice that they want to share.
I mean, I would say one that was an angel investment of mine, and this was before I was further along, at least in the venture world, where, I encouraged a founder to kind of pursue 3 different routes to market while they were still experimenting in their product development. And I don't think I understood the paradigm of venture in terms of how important it is to set yourself up for that next phase or for that next round. And I think eventually ended up, probably not getting far enough on any one of the routes to market than if they would have maybe took a more strategic view and pursued one, could have been further along to then raise that next round. And I took some lessons learned away from that to apply as a result.
Also, I know it's... I'm sitting here asking the questions. I'm also an investor, and if someone were to ask me on the spot, "What's the worst advice you've ever given?" I would be sweating.
I've got more.
We've only got 5 minutes. We can continue on the best or the worst advice, but we've actually all decided we're open to taking questions from the audience. Now that we've had a global pandemic, we know how to use QR codes. So if you do want to ask a question, you can scan it right up here, and I will read what we have. We hear that most investors choose to invest from networks. Okay. We hear that most investors choose to invest from networks. Why so? In that case, offline networking is it more effective than online networking? I promise you, I generally can read. Okay, what do we feel? Online, offline?
I can definitely add color. This has been one that's been probably the most eye-opening for me coming in on how important and how deeply the team thinks and considers of those warm introductions versus cold. And I actually was quite surprised because I'm coming in from a place where good ideas can come from anywhere, right? But I would say immediately there is more weight put on an introduction that comes from a trusted source or someone that has remit. And literally, even if you have to just hustle your way into, yes, some introduction versus a cold inbound, that will behoove you and be much more weighted with much more importance as a result. Just my early perspective. Michael has a lot more.
Yeah, I think so online versus offline. I still think offline network is the way to go. I mean, you want a warm intro. You want somebody that it's either an intro from a founder that this new entrepreneur has worked for. I mean, I think there's just so much risk in this industry that investors are constantly looking for any kind of signal that would mitigate that risk. It might be that person worked for a certain company, they went to a certain school, whatever. It's still, and I know there's kind of this movement amongst entrepreneurs to say, well, no, we should be less elitist in that way. But if you still look at most investment portfolios, it's not saying that the VCs are being sort of painting a picture with elitist, like, oh, this guy went to Stanford or this guy went to Cambridge or whatever.
And they're all guys.
There is just some sort of validation that you get there, and you're always looking for any kind of signal that this company has the most upside potential possible.
And I know you've been thinking on your question, but would you be open to taking the next one? Simply because it's got a lot of votes up. Also, guys, feel free to ask a bit more personal questions. Payton backstage was like, is this a roast or an interview? And I was like, Payton, it's a barbecue. Haven't you heard? But yeah, let's say we got 3 votes up for this. Justina, I think you answered a little bit, but maybe you can answer on your personal anti-portfolio. Why did you pass on your personal anti-portfolio companies? What was perhaps a red flag or something in general that made you say no?
Yeah, it's difficult because I have my personal anti-portfolio, so does the fund. And sometimes, it's very human things like missing a flight. Sometimes it can be that you think it's a great founder, a great company, but not the right valuation. And it doesn't mean the business is, any lower quality, but it just means that it's not the right profile for your fund and not the right entry point. So it can really come from anywhere. And, we were discussing earlier on backstage that sometimes there are companies that grow really well. Say you're a 50 million revenue company, you're growing 20% every year, you're profitable. That is a good business. That could be a great founder, it's a good business, but it's not a venture capital business. So there is a nuance and a differentiation as to what type of investor you're talking to, what they're looking for, and the type of returns that they would have to generate for them to continue on in this business and for that to make sense for them.
Okay. There is one more question that I'm interest of time, so maybe we have to give one-word answers to this. What are the key cultural differences between investing in Europe or the USA? In one word, what do European founders lack? Oh, that's a PR nightmare. If somebody has that like Jeopardy waiting music, this would be a great time to kick it into action.
I feel like you're asking
I know.
Very biased questions.
Everybody's looking at me on this one. What do they lack? I think Europe lacks cohesiveness. I think that's one of the biggest issues investing in Europe is that the exit markets are just fragmented. The markets to scale are fragmented. So I think, and also I think still unfortunately with some of the European founders I meet who are absolutely amazing and brilliant, they're still not ambitious enough.
Michael.
And if their ambition met the level of, I meet amazing scientists, amazing researchers, and if they just had a little bit more ambition, and if European academia maybe integrated sort of a more of a pro-business culture into a lot of their sort of research centers and things, I think Europe would be better off. So I think the government needs to do a better job of making Europe a much more cohesive market. And I think there also has to be.
This is
wasn't
the
a one-word
longest
answer.
one-word answer I have ever heard. You're going on about
ambition
the
on the founder side, like
we're talking about, we got
unity
0
on
minutes
the
left,
market
and we're
side.
talking about the government.
Government
Okay, before you kick me off, do you have a one-word answer? I'll say boldness. To be bold.
Yeah, I would say global, and it's very.
Justina, what's your one-word answer? I'm sorry.
All right.
Good job.
I feel like it's a 2-hour discussion.
Right?
Yeah.
What's wrong with Europe
If you
in
want
one
to
word?
find Justina's one-word answer, you can find her at Justina on LinkedIn. She works at Bessemer. And thank you all for listening to us. Thank you very much for putting up with me. And I hope we do actually have a barbecue. I still don't have an answer to that question. And let's try not to fall off the stage when we get off of it. It's more of a note to myself. Thank you very much, guys. And thank you as well.
Thank you.